Hello and welcome to the Results Setu online YouTube platform. Today we are talking about hedging. What is hedging? All you need to know about hedging is compilation in this video. So let's start it. Hedging in stock market. Hedging is a technique used by investors to reduce risk of loss associated with an investment in the stock market. Hedging is a way of protecting oneself from potential losses that may arise from adverse market conditions. Hedging strategies are used to reduce the risk of loss due to volatility in the market. Why is hedging used in stock market in these days? Hedging is used in the stock market to reduce the risk of loss associated with an investment. The stock market is inherently volatile and prices can fluctuate significantly in a short period. Types of hedging strategies. There are several types of hedging strategies used in the stock market. Each strategy has its benefits and drawbacks. An investor should choose the one that best suits their investment goals and risk tolerance. Types of hedging strategies. First one is option hedging. Option hedging is a strategy used to reduce the risk of loss associated with an investment. An option is a contract that gives the holder the right to buy or sell an underlying asset at a specific price within a specific time frame. Second one is diversification. Diversification is a strategy used to reduce the risk of loss associated with an investment. Diversification involves investing in a variety of assets across different sectors, industries, and geographies. Third one is future hedging. Future hedging is a strategy used to reduce the risk of loss associated with an investment. Future contracts and agreements to buy or sell an underlying asset at a specific price and at a specific time in the future. Another one is short selling. It is most popular in the short share market. Short selling is a strategy used to profit from a decline in the price of security. In this strategy, an investor borrows share of a stock and sells them with the hope of buying them back at a lower price to return to the lender. The investor makes a profit from the difference between the sale price and the purchase price. This is an important part of short selling. Now we are talking about benefits of hedging strategies. The benefits of using hedging strategies in the stock market includes risk reduction, potential gains, diversification. These three are the most popular and useful benefits of hedging strategies. On the another part, we will also discuss about drawbacks of hedging strategies. It will increase complexity because the graphs, charts, candlesticks, patterns, lots of functional indicators are increased complexity, and hedging is also increase the complexity of trading, which will exhaust the trader's mind. Another one is cost and reduce it will reduce returns also, because when the graph is up and down, it will make more money. If you hedge before time or before the wrong calculation or miscalculation, you will lose money in the market. Now the hedging is in conclusion, hedging is a technique used by investors to reduce the risk of loss associated with an investment in the stock market. This article is also given in the detail on the blog post. If you want to read it, link given in the description. So go on. Thank you.